to me, I really want to ask, and maybe I'll start with Gareth. I want to ask sort of why do lenders, traditional lenders, still use sort of the old credit scores from before, when we have, there's been an explosion of data, we have big data everywhere. Why isn't that data being used?
Well, what's in it for them, right? Like, they've got the balance sheet, they've got the access to markets, they've got the branch networks, they've got the digital channels. How aggressively do they need to grow the consumer credit, their share of the consumer credit market? Yes, there are underserved segments of society, but a private enterprise doesn't have a legal responsibility to meet unmet needs, do they? They need to manage their own risks. They want to achieve their own commercial goals. So I suppose it does come from a what's in it for them. Now, I think what's in it for them is, just as other participants have added, is, look, you've got some old mistakes, you've got some old life events. Like, it's not always I bought too big a telly, is it? Sometimes it's I got made redundant. Like, you can experience financial difficulty because of things you do and things that are done to you. And so I think for businesses that are reliant upon consumer credit lending, as mainstream lenders are, they're going to need to be more creative in how they assess creditworthiness and affordability in order to keep that market share. So I think until now they've not needed it, but as the marketplace becomes more competitive and as those credit files themselves begin to deteriorate, but the affordability may be there in lumps and bumps in the marketplace. I don't know necessarily that it's the financial inclusion aspect of things that will drag mainstream lenders into more wide use of this technology. I think it may be simply in their own commercial interest to keep pace with where they would have been had there not been a crisis, that hopefully will lead to the adoption of the technology. From my point of view, I don't much mind about what makes them do it, as long as they get on and do it. I would love to see it come from a real commitment to financial inclusion and financial well-being, but a better use of the technology means more people rightly receiving credit and financial services when they need it.
Okay, Tim, I can see that you're waving your hand trying to get in. What do you want to add to what Gareth has said?
What's in it for them? I mean, that's an amazing statement from a bank. But what's in it for you as a bank is to make sure that you're lending affordably to your consumer base. I've got to tell you that within what we see in open banking is the constant indebtedness of people in overdraft. And, we talked about persistency, and the FCA moved on persistency with credit cards. And people, paying down the capital. But, we see people in a persistent overdraft year after year. Now, that information has come to light, and I'm deeply concerned that the banks don't seem to be bothering about persistent overdrafts. We're talking about people paying £3-4 a day to manage an overdraft over a prolonged period of time. So what's in it for you, Mr. Banker, is that you are fulfilling your obligation to civil society by ensuring that you are affordably dealing with your customers. And it's not what's in it for you, because ultimately I think this is a responsibility that you're going to have to adopt open banking across all levels of lending and credit and extension of overdrafts. So, roll on the day when the FCA force all lenders to use open banking. And I have to say that credit scores, again, they're holding people back. Everyone's been sold this idea about being a good credit citizen, but it doesn't really work when you've got open banking that's available to you. And it's your data that you can share with whoever is able to consume that data. So that's my view on why open banking should be used more widely.
And Shiraz, do you have any, what's your take on this?
Look, I've been in lots of panels where people have turned around and said that the credit scoring system is out of date and not fit for purpose. And And my view in it is that it has a role. It has a role because it captures historic behaviour. But I've already said, I can see Tim shaking his head, I've already said on this panel that there is additional information through open banking that should be used to supplement what already exists, because there is a balance between affordability. If you're assessing risk, like I said, I'm not a lender, but if you're assessing risk, there is a balance between affordability and previous behaviour, and that will be part of the decision-making process that someone will look at and say, right, if I'm going to lend to you at a reasonable rate, given where interest rates are, is that 6%, 8%, 10%, if I'm going to lend to you at a reasonable rate, there is a whole host of information available. So yes, open banking and affordability plays a role. And I've already said that as a business, we do affordability from a rental reference perspective. We do affordability checks when someone is looking to rent out a property to understand whether or not they can afford to rent the property out. And on the flip side, we collect and verify rental payments to show prospective lenders that actually this person has exhibited good payment history. Use that and take that into account in a decision-making process, because historically the credit scoring system has ignored rental payments. And when you have 35% of the UK living in rented accommodation, if they've shown good behaviour when they're paying their rent, our view has always been that should be factored into any lending decision.
But it's available in open banking, right?
Correct. And what I've already said is that we have supplied that information, because at the end of the day, if you look at a line that says rent, there are a number of questions. Okay, was it paid on time? Was it the right amount? Because actually looking at it in isolation is not going to answer those questions for you. So we collect a whole, we collect a raft of information that we then say, right, this is a benchmark, this is a start point, and actually how has someone paid their rent against what they should be paying? Because if you see 3 rental payments, like I said, it doesn't mean it was paid on time, and it doesn't mean it was a full amount. So when you're assessing whether someone's shown good behaviour, they are some of the factors you need to take into account. But as I've already said, the open banking side of it and using the data that's available should be used. We use it already, right? Other people should use it. We can make it available if someone doesn't have the skill set or the resource to do it. We can make that available. You're using that, Tim, yourself in terms of your own business. That should supplement what's already available.